Young people are buying stocks more than they're buying homes. JPMorganChase data indicates that more young people and lower income people are invested in the stock market than ever. Meantime, first-time home ownership is at record lows. And this is indicative of next-generation wealth building really flipping the American dream on its head. As home ownership has gotten increasingly less accessible with record high prices, investing in the stock market has gotten more accessible. Lower income people are now 5 times more likely to be invested in the stock market than they were a decade ago. But savings accounts for these groups are still low. And this is where there's a little bit of caution from the researchers behind this study who I spoke with. While it's great to see more people getting invested in the market, especially as we continue to see the wealth gap widening and the stock market is a way to build wealth, the activity of this particular group is not indicative of the best investment hygiene. The research showed that investors from these groups are buying into record highs in the stock market and crypto, for example, as opposed to practicing what is traditionally the most widely followed financial advice, which is to dollar cost average your investments, putting a portion of your paycheck into the market at regular intervals, regardless of where the market level sits. And this particular generation of investors hasn't necessarily seen a long-lasting market downturn before like we saw back in the global financial crisis. We know that historically over time, stocks always recover, but this generation of investors hasn't been through a long-lasting bear market yet.